Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. Is a quickly growing restaurant company a good investment? In this video, we will be analyzing if Brinker International stock is a buy. Could Brinker, stock ticker symbol EAT, push even higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Brinker International. Brinker was founded in 1975. They are a leading casual dining restaurant company that owns, operates, and franchises popular restaurant chains such as Chili's Grill and Bar and Maggiano's Little Italy. With worldwide operations, the company has approximately 69,000 employees and is headquartered in Dallas, Texas. Now let's look at the price action. Starting with the one-year chart, we see that Brinker had a CAGR of about 269%. Zooming out to the 5-year chart, we see that Brinker had a CAGR of 27%. Brinker International has a long record of growth that has rocketed as of late. A 269% return in the past year is astonishingly great. A backtest comparison of investing $10,000 in Brinker International versus the S&P 500 reveals some key differences in performance. Brinker generated an ending balance of $26,762, which translates to an annualized return of 10.34%, while the S&P 500 grew to $33,970, achieving an annualized return of 13.01%. Brinker's performance was also more volatile, exhibiting a standard deviation of 56.83% compared to the S&P 500's 15.33%. This higher volatility manifested in more extreme outcomes. Brinker experienced a best year of 206.37% versus the S&P 500's 31.22% and a worst year of negative 35.32% versus the S&P 500's negative 18.17%. Furthermore, Brinker suffered a significantly larger maximum drawdown of 76.95% compared to the S&P 500's 23.93%. When considering risk-adjusted returns, Brinker underperformed the S&P 500 on both the Sharpe ratio, 0.41 for Brinker and 0.76 for the S&P 500, as well as the Sortino ratio, 0.78 for Brinker and 1.19 for the S&P 500. These metrics indicate that Brinker's returns did not adequately compensate investors for the level of risk undertaken, though the previous 12 months of outperformance are undeniable. Now let's hop over to market share and take a look at Brinker International's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under the restaurant tab and see that Brinker International is categorized as a casual restaurant company. Expanding the casual restaurant tab, we can see that Brinker International is tied with Bloomin' Brands for the third largest market share of the restaurants listed, but is growing its market slightly faster. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Brinker International, EAT, and see that the market share is 0.55% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Brinker International accounts for relatively little spend but has been growing market share at a healthy pace. The 5-year market share CAGR for Brinker International is 2.61%. This means that Brinker International market share is outpacing growth in the wider industry, if only by a small margin. If we start in 2020, we see that the market share was 0.5%, 0.46% in 2021, 0.48% in 2022, 0.52% in 2023, and 0.55% over the trailing 12 months. Since bottoming in 2021, Brinker's market share has continued to rise steadily. Let's take a look at the fundamentals to learn more. Gross margin is 15%. This is on the lower end for a casual restaurant company. Revenue has compounded at around 10% over the past 5 years and has reached over $4.54 billion most recently. Brinker International's revenue had been growing at a pretty steady pace and doesn't show any signs of slowing. When we look at cash flow, we see a 14% CAGR over the last 5 years for operating cash flow period. CAPEX has worsened at an 18% CAGR. As a result, free cash flow has grown at an 11% CAGR. As we can see from the increasing CAPEX, Brinker International has been heavily investing in expansion. This is what is likely driving their market share expansion. However, we can see that this multi-year investment cycle has pressured free cash flow period. As the result of that investment and market share growth continues to trickle down to operating cash flow, we should see free cash flow return to higher levels. Weighted average shares outstanding have grown over the last 5 years, going from 38.9 million shares in 2020 to 45.8 million shares most recently. Brinker International has been diluting shareholders. However, since 2021, the share count has drifted downwards, and I imagine this will accelerate as free cash flow continues to grow. Now let's view return on invested capital. Return on invested capital has fallen from 28.5% in 2020 to 11.4% most recently. Coinciding with the CAPEX investment cycle, the return on invested capital bottomed in 2022 and 2023 and has steadily been growing since. I would expect this value to continue to improve over time. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 3 days in 2020 to -2 days most recently, Brinker International has gotten more efficient over time. This is what I like to see. A negative value indicates that Brinker has operational leverage in managing its inventory and supplier. Now, let's look at Brinker International debt. The net debt to EBITDA has fallen over time, going from 8.9 in 2020 to 4.1 most recently. This is due to Brinker rapidly growing their earnings while paying down debt. While 4.1 is still high, this metric is trending in the right direction. Brinker International looks like a good company. In any event, is it a buy? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Brinker International. It is a restaurant company with a gross margin of 15%. The 5-year revenue per share CAGR is 6%, and the 5-year free cash flow per share CAGR is 7%. While the gross margin is not great in the revenue and free cash flow growth is not stellar, this company has done very well due to management's consistency in operating. A return on invested capital of 11% is not great, but it is not bad either. And I like the trend of growth. Next, the cash conversion cycle of -2 days is really good and seems to only be getting better. Concerning debt, a net debt to EBITDA 4.1 means that it would take Brinker International 4 years of earnings to pay off their debt. So from a fundamental standpoint, Brinker International is still pretty solid. Now let's switch our attention over to valuation. The price to earnings growth, or PEG ratio, is 2.2, indicating that Brinker International is overvalued relative to their projected earnings growth. Clearly, Brinker International's growth strategy is working. They've successfully adapted to changing consumer preferences, offering more delivery options and revamping their menus. This has translated into solid revenue growth, market share expansion, and increased profitability. Plus, their strong brand recognition and loyal customer base provide a solid foundation for continued success. However, there's a catch. Brinker is currently trading at a premium valuation, meaning its stock price might be a bit inflated compared to its earnings. This makes it riskier, as any negative news or disappointing earnings reports could send the stock price tumbling. Also, the restaurant industry is notoriously competitive, with new players and changing consumer tastes constantly challenging the status quo. Personally, I like the growth, but I'm a little late to catch it at a good value. Overall, I give this company a 6 out of 10 using my proprietary scoring system. I like the company but would like to see the debt come down more, and it would be great if it could achieve growth more efficiently. For me, I will continue to watch this company. Many thanks for watching. What do you think about Brinker International? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.